Hello, thanks for joining me again today, and this video is about mortgage reserve requirements and what's required for each type of mortgage. The first thing I want to explain though is, in case you don't know, what is a reserve or what are reserve requirements. And a reserve requirement is when the lender is requiring you to have a few extra months payments in reserves in your savings or checking account. Okay, so for example, if you have a total of a $1,000 mortgage payment, which includes your principal, interest, taxes, and insurance, all combined is $1,000. If the lender requires, say, 2 months reserves, then they'll want to make sure that you have at least $2,000 saved after your closing. So they want to make sure you have enough money to make 2 more payments. Two months of reserves is what that equals. Okay, so hopefully that explains what reserves are. And so each type of mortgage and each scenario within each type of mortgage might lead to a different reserve requirement. And also, lenders themselves might have their own overlays, which, I think overlays is going to be a whole other video to explain what that is, but some lenders have different requirements than others based on your scenario. I guess that's the best and easiest way to describe that. So let's talk about FHA loans. FHA loans typically do not have reserve requirements for a single family residence. However, as you get into multifamily units, you might have a reserve requirement of up to 3 months. Okay, so the next type of loan we can talk about is VA. VA, again, just like FHA, doesn't have a reserve requirement for a single family home, but as you get into multifamily homes, you might have up to 6 months reserves required for those. USDA loans, there are no published reserve requirements that are required per USDA guidelines, and for conventional loans, you could have up to 6 months worth of reserves required for single family and also multifamily properties. Now, I mentioned that you might have some lenders that have overlays. So if you have poor credit, you may be required to have extra reserves, even though, for example, FHA does not require the reserves. The lender will then implement their own overlay or requirement as a safety net to make sure that you are a viable borrower. They want to make sure that you're able to make the payments. So that's just an example right there. Poor credit being the most common issue. If you're just entering into the time where you're able to get a new mortgage after having a prior bankruptcy or foreclosure, even though you're beyond, say, the 2-year or 4-year, depending on what it is you have seasoning requirement, the lender still might, out of risk abatement, ask you for some reserves prior to close before they move ahead with your mortgage. So those are just a couple of examples. Maybe your DTI is a little high, and they might want to make sure you've got reserves to make sure you can make the payments, because if your DTI is high, they're thinking you're a bit stretched, you've got this other debt going on, you might not have enough, so they might ask for reserve requirements there. So hopefully that explains it, and if you have any other questions, leave them in the comments below. Thanks again for watching, and have a great day.